Hey everyone, welcome back to the ScholarAI Founders Pod. Quick reminder to find us on all the typical podcast locations and find us on our YouTube channel. Today we have a special episode for you. We're talking all things crypto with the recent milestone of Bitcoin crossing the 100K threshold. Josh, I know you've had some recent experiences, went to a conference over the last few days where Bitcoin was a subject of interest. So why don't you kick us off just describing kind of what you were hearing, what people were talking about, the general kind of conversation around crypto in general.
Bitcoin's definitely in the air now. Bitcoin's just crossed 100,000 for the first time, all-time high. And I have some friends who have been Bitcoin enthusiasts for a long time. So one has half his net worth in Bitcoin. Another has over 90% of his net worth in Bitcoin. And I have lots of other friends who are kind of very, very big enthusiasts of Bitcoin. So it's definitely in the air. The all-time high is in the air. Donald Trump's presidency is a positive sign for the regulatory environment around crypto. David Sachs was just appointed head of AI and crypto in the Trump administration. So there's a lot of kind of positive regulatory context around crypto. I heard a talk from Michael Saylor, who is in charge of MicroStrategy. It's primarily a Bitcoin holding company that also owns operating companies. And MicroStrategy owns 402,000 Bitcoin. So I believe they are the single largest Bitcoin holder. And I believe he is the single largest Bitcoin holder. I could be wrong, but that's my understanding. And they're raising what I understand to be another 40 billion to buy at 96K Bitcoin. So they're raising money, they're raising additional capital to buy Bitcoin at its all-time high. I hear lots of belief around $1 million Bitcoin coming soon. So the talk that I heard was Saylor talking about a presentation he gave the Microsoft board on why they should be holding Bitcoin instead of cash on their corporate balance sheet. There are two significant potential drivers for Bitcoin's price to go up a lot. One is if corporate balance sheets, instead of being held in cash, are held at least in part in Bitcoin. That would be under the belief that Bitcoin is more recession-proof than cash, and that holding your treasury reserves in Bitcoin would be at least a balancing hedge. At least if it's split, let's say, between cash and Bitcoin, that would drive a ton of capital into Bitcoin and would certainly drive up the price of Bitcoin pretty significantly. The second would be if governments, including the US Treasury, start to hold Bitcoin as part of their reserve. So it's the same principle as the Microsoft idea. If the US government, instead of holding a bunch of cash or treasuries, holds Bitcoin, at least in some proportion, that would also be a huge driver of Bitcoin demand and would drive up the price. So that's the activity that I've seen. I'll let you guys jump in with.
Which I know you don't play in this space as much, but the recent weeks have kind of forced an education, I think, on most people. Any comments to that directly?
Yeah, I think with Bitcoin generally, I think the interest in it is fairly positive. I do foresee that, like, given Trump's regulatory, I guess, like, interest in, like, I guess, allowing Bitcoin to exist as it would, quote unquote, ideally. I understand the run up. I think for me personally, it's just, I think $1 million is crazy. I think, like, maybe it's coming, but, like, at least in the way I look at, like, financial assets in general, regardless of the logic of it, since this one's so dependent in the same way like a stock is on, like, people's emotions and feelings about the state of that asset. I personally feel like, of course, hindsight's like whatever. Like, it probably would have been wise to hold some Bitcoin like 3 years ago and just sit on it or something. But I think currently, I feel like it's like probably hitting a peak in the hype wave, and I'd let it like cool off before I get into crypto proper. I think. I think it's just like, it's the sort of thing where, like, if you're hearing about it, odds are you're kind of too late to get in on it. Like, I feel like crossing 100K is a big threshold, and like to drive more hype moments in people's expectations of buying this thing. Of course, there's like some big whales who are trying to buy, like Saylor and that sort of thing, on trying to drive like large amounts of capital that's going into Bitcoin. But But on the side of like retail investors, that sort of thing, like it just feels very vulnerable to the point that like I feel like the hype wave has reached a pretty critical mass. So I personally would get in on it. Of course, if you're a big spender who can like throw millions and like tens of millions at this sort of thing, different story. But
I think it's interesting. We've seen these kind of major peaks and valleys of hype. I can remember living through kind of, 2020 and peak COVID where people were kind of lots of time at home. There was lots of excess stimulus in the kind of overall environment. People were buying kind of Bitcoin like crazy. We saw a depression, kind of a valley over the last couple of years. And then now we're kind of back at a relative peak. So I do wonder if that's going to continue or if we're going to see a little bit of stalling. I think that obviously the election news gave it a bump. I think there's been, as Shashi was saying, some pro-regulatory momentum around the crypto industry entirely. So I guess it does feel a little bit dangerous, I think, to speculate right now, Lakshay. So I mean, I think I generally agree with you. But I just think that trying to predict Bitcoin with any relative certainty has been a tough effort so far. But Shashi, I want to kind of kick it back to you because this idea of kind of levering up, so to speak, to kind of purchase these highly volatile assets, right? Bitcoin has historically been somewhere in the 4-ish times volatility range of like the S&P, for example. So it's 4 times more volatile than the S&P kind of on average. There's obviously some deviation around that number. But the point being is something that is 4 times more volatile than the kind of, standard investment vehicle, which is the S&P 500. I'm curious how that lands to you as someone who is thinking about long-term wealth. You're the only one on this podcast that has, family, children who are kind of are thinking about these things, maybe are slightly risk adverse with some of your investments, although you are obviously risk seeking with a different part. I'm curious how that lands with you. Is this the first time that you're seeing something that is this volatile, seeking these kind of large investment stakes, or is this just a cycle that will kind of reoccur, and there are evidence of this in history?
As an investor, the way I see Bitcoin is as primarily a speculative asset. It doesn't have some of the attributes that as an investor you would want. So let's say you are in the position where you have some amount of net worth, perhaps you're retired, and you're living off of the interest income of your investments. So you've accumulated some amount of money after many years of hard work, and you are living off of the money you've made and the interest that it generates. Bitcoin doesn't generate any interest. So a treasury compared to Bitcoin, a treasury will issue you presently roughly 5% interest. That's going to be treated as ordinary income. So you're going to pay taxes on that. So you're going to have about 3% of the money you invested as annual interest that you can go spend for your day-to-day life. Bitcoin doesn't issue any kind of cash like that to go spend. So that's one of the concerns or drawbacks of putting, let's say, a big part of your nest egg into Bitcoin is you can't go spend it. You can't go use it for anything materially. It's also taxed. So if you cash out, you're going to pay, if you've held it over a year, capital gains tax. And that also could apply for state capital gains tax if you live in a state with capital gains tax. I live in Texas, so Texas doesn't have state income tax, but many other states do. And so you're going to be paying taxes on any Bitcoin you sell in order to fund your day-to-day life. And that's an important consideration. Bitcoin, as Michael Saylor said, I had the chance to speak to him briefly, and I asked him about the bear case for Bitcoin and how he sees that, especially as it relates to global conflict, whether that's Russian conflict, Chinese conflict, Iranian conflict, etc. And his view is that all of those would drive up the price as demand from those local people go in. And actually, I think that's pretty reasonable. I don't own any Bitcoin, for the record. I've always been a bit of a skeptic of Bitcoin, primarily because it's such a poor use of transactions. You can't really buy anything. You can't go buy pizza or coffee or pay rent or do anything functional with Bitcoin because of the long time that it takes to complete a transaction. The last I saw, it took 21 minutes or something to complete a Bitcoin transaction, because miners, these transactions go into a big ledger, and then those ledgers get folded into the kind of global Bitcoin ledger as an additional block on the chain. And that process of adding takes considerable amounts of time. And obviously, as we know, it's proof of work, so it takes a ton of energy and a ton of compute for whatever miner ends up being able to solve that mathematical equation and add that block to the chain. So all of that is to say, as an investment vehicle, it's speculative. As a daily use means of exchange, it's a very bad solution for that. And so what am I hearing? I'm hearing reasonable people say something like a 2% allocation. Even if you're a skeptic, a 2% allocation into Bitcoin, it just makes some amount of sense, because if it were to 100x from where it is, if fiat currencies do devalue over time significantly because of inflation and money printing, and Bitcoin is the hedge against that, then some amount of hedge bet, a 2% or 3% allocation of Bitcoin, even for the skeptics, probably makes sense.
Yeah, I think that's well put. I think the other thing that is drawing parallels in my brain right now is this idea that Bitcoin is being held as an alternative asset on company balance sheets, specifically for MicroStrategy, in the same way historically that companies would hold real estate. So they're effectively levering up to go buy this alternative asset that is somewhat tangential to their core competency as a business, in the same way that some company would buy a brick and mortar storefront, maybe on Fifth Avenue in New York or the Magnificent Mile in Chicago, and that asset singularly would be viewed as an additional asset on the company's balance sheets, in addition to whatever they were kind of selling. And so I do find that as an interesting idea. I think that when we speak about cryptocurrency at large, there are almost two independent yet related conversations, and that's one of these as idea of investing as a commodity, as you're describing, Shashi, and the other one is this idea of practicality. Are these things actually going to be used for transactions? I generally agree with you that Bitcoin has not been built from the bottom up to be used on a day-to-day, but as a commodity investment, in the same way that people might invest in gold or wheat or anything else, the practicality of it may or may not make sense. I want to pivot the conversation slightly, Shashi, because you said something very intriguing on a couple of podcasts ago with this idea of the decentralization versus centralization, and just kind of priming those in the audience that may not be as familiar with these. The idea essentially is that fiat currencies, things like the US dollar, the euro, etc., they're backed by a singular entity, even though it may be a collection of people. It's backed by, in the US dollar's case, the US government. And that fiat currency fundamentally garners trust because of the backing of that institution. Cryptocurrency, alternatively, is decentralized. Therefore, the trust comes from the network of individuals on the blockchain. There is no kind of centralized authority for bestowing upon this asset trust. And Shashi, again, I want to kind of kick it over to you. You kind of pushed back against this idea of decentralization on a couple episodes ago. So why don't you unpack that thought, and then we can kind of see where that takes us.
Yeah, I want to raise three concerns about Bitcoin. These are what I believe to be material risks to being a holder of Bitcoin as an investor, and because they affect each major investor, they would also affect Bitcoin's price. So the first is a hard fork. So what that means is that Bitcoin is decentralized in the sense that there are major governing nodes that need to synchronize and align on what is the quote unquote truth of the blockchain. And there have already been hard forks of the chain in the past in a global conflict. So the question I asked Saylor was in the context of a global conflict. Let's imagine there's a conflict over Taiwan, or there's a conflict in the South China Sea, and part of the protection mechanism is that China prevents its citizens. They already outlaw Bitcoin, but I imagine some folks hold Bitcoin anyway. They could become more active there and hard fork all of the nodes that are in China to a new standalone thread, so non-aligned with the current Bitcoin thread. If that were to happen, then what would be the effect on the price of Bitcoin as it stands today? If you were in China, presumably you would continue making kind of transactions, or maybe getting your Bitcoin seized by the Chinese government, and then the Chinese government would try to use that Bitcoin on their hard fork. How does that then reconcile with the other side of the fork, mainly, let's say, everyone else, or perhaps the United States, just to use a simple example? If you were in the United States and you wanted to use your Bitcoin, and now these are two sort of different threads of transactions that have proceeded. How does that affect the price of somebody's Bitcoin if you live, let's say, in the United States? It's very hard to know this answer. And if Bitcoin is thought of right now as this global agreed thing, but in a global conflict, in a destabilizing world, I hear many smart people forecast that we will be heading into a destabilizing period in the next 5 years. If that happens, and if there is some kind of destabilization to the global agreement of the nodes, and we have hard forks, how does that affect the price? There's a real unknown there, and it could drop dramatically. So that's one risk. Risk number two is, even if we don't have something that dramatic, many of the people who buy Bitcoin live in third world countries, or countries where their local currency is less reliable than Bitcoin. You just described, Damon, Bitcoin's variability is 4 times as volatile as the US dollar. If Bitcoin is seen as a better alternative than your local currency, then it stands to reason that you also probably live in a country where the government could come and try to seize your Bitcoin, especially in a period of time where there's global economic challenge and difficulty, economically especially. So if you lived in Argentina, for example, or if you lived in Colombia or Bolivia, or if you live in sub-Saharan Africa and you have a lot of Bitcoin, the government shows up with dudes with guns. This is the dudes with guns problem. The dudes with guns say, "Give me your Bitcoin or your family goes away." And what are you going to do? If you're faced with a choice, the weakest link in any security mechanism is always the humans. It's the case with internet security. It's the case with public and private keys. It's the humans that are the vulnerability. And if you care about your humans more than you care about your Bitcoin, chances are you're going to say, "Take my Bitcoin and leave my family alone." And so this dudes with guns problem is a real one. And the third problem I'll cite is the risk of loss. We've all heard stories of people who have their private keys on hard drives. Maybe they own 1,000 or 10,000 Bitcoin, and they lose their hard drive, and they spend the rest of their lives trying to recover that lost hard drive, finding it in. There's a story of a guy who had, at the time, was 50 billion in Bitcoin. It would probably be 500 billion by now. That he lost his drive with his private key. He accidentally threw it away, and he's been paying garbage companies to find all the potential drives out there to try to bring it to him to try to recover his private key. So the risk of loss, even if it's not that kind of loss, even if it's that you pass away and your kids get your ledger, your cold store ledger, and try to recover it and can't, like, the risk of loss of your Bitcoin is just so high compared to traditional bank accounts, because we have an established banking system and legal system supporting it, that, in my opinion, it's just more reliable and more trustworthy to have your material worth in the banking system and supported by the US legal system, which is the best one we have.
Actually, any thoughts on that?
Yeah, when you were talking about, I mean, I hadn't heard about this like hard fork problem. Has that happened at like any meaningful scale already? Because you said it had happened before, but like how far has that gone?
So I'm not an expert on this. If you look up Bitcoin hard forks, there are examples of hard forks that have happened, and we'd have to ask somebody who just knows this better than I do.
I see.
Sorry, I'm not an expert in this. Yes, exactly. Yeah. Anyone want to be a guest on this topic? Please hit us up.
Yeah, no, it's interesting. I think, I don't know. I guess like part of the whole ethos of Bitcoin being like its traceability, like the dudes with guns problem, like, I don't know, that you can't do anything about it. I don't think like for someone who's living in an unstable government, there's something really to solve there in the truest sense. It's just interesting to me to hear about like these edge cases where like the whole system is like offering the concept of trust, but there's like these 2 or 3 critical things that if there is like enough of a group backing it, whether that's a fork or whether that's like the loss of a ledger or like the forced takeover of a ledger that you can't really get it back. Again, I say that relatively uneducated about crypto in general, but it's interesting to at least think about, like, for example, you mentioned like the China-Taiwan case, like how does that even like begin to resolve if your ledger is decentralized by nature? I don't know. It's like, it feels like super, super paradoxical to me, like supremely paradoxical.
I think one of the things that is yet to play out is the decentralization really more robust and trustworthy than a centralized force? Historically, that has not been the case. I think that the Bitcoin bull would also point to the fact that historically all fiat currencies have failed. And that just, basically the fundamental premise of a fiat currency is it has a lifespan and it is doomed to fail based on a failing government. And I think that, we can speculate if that is true, and then we could also speculate about the timeline. But I think in general, the ethos of Bitcoin and other cryptocurrencies is it overcomes this idea of a centralized institution and therefore is more reliable. I don't necessarily have a very strong opinion one way or the other on that. I think that for those that want to be kind of, advocates, true believers in Bitcoin or some other alternative currency, that is the position they would take. And I think in addition to the guys with guns problem, which Shashi, you've articulated, I think there's also a problem of if you do live in a different country, if you do live somewhere where you're actually trying to transact with Bitcoin and you're kind of existing in one of these doomsday scenarios, in which case, you really are devoid of resources. The value of that Bitcoin is now relative to whatever you're trying to transact with it. Meaning, like, if all of a sudden you can't feed your family because the value of your local currency has reduced to effectively zero, and you now have to transact for bread or for eggs or milk in Bitcoin, the person holding that bread, eggs, and milk now sets the market. So independent of whatever the global price of Bitcoin is, there is no way for you to actually transact with it unless you're going to trade it into something like the US dollar or some other fiat currency and then try to transact with that in your local economy, in which case now the local economy is still being set by the person who is holding the actual goods and service. So to me, no one has really been able to articulate how Bitcoin solves that fundamental problem. That when in the disaster scenario, in which case Bitcoin is supposed to be superior to fiat currencies, no one has kind of been able to articulate to me how anything overcomes this fundamental market dynamic of no matter what fiat currency or cryptocurrency, when you have to exchange it for the actual goods you need, the person holding those goods you need, they define the market price. Shashi, sounds like you want to react to that.
I have a question for you, Damon. So in this world where now Bitcoin is more supportive, the regulatory environment is more supportive, how do you see YC startups? How do you see Andreessen startups in crypto? Do you think the environment now changes so that many more of those venture-backed crypto startups are in vogue again, are growing again? How do you see the YC? How do you see the venture community in crypto?
I think it's an excellent question. I think the thing, from my understanding, that has bottlenecked the largest swath of innovation in the startup ecosystem that would typically be venture backable is this idea of debanking or anti-banking practices. I mean, if I'm a startup and I'm primarily focused on the cryptocurrency or the blockchain industry, it is harder for me than somebody doing traditional enterprise SaaS to get banked, to literally have a bank account, to get a loan, to be able to collect transactions in credit cards, those kind of things. This is also true of like the cannabis industry, for example. These are large cash businesses that have otherwise been unbanked, and that provides additional constraints on an already hard endeavor, right? Startups are already hard. It's very difficult to kind of build something that people want and to be able to satisfy your users. And if you also have this additional regulatory burden of, I can't get a bank account, I can't be seen as trustworthy, that's again another hurdle. So I think that a lot of the regulation momentum that we've seen recently is going to help with that specific problem. It's going to remove a hurdle that previously existed for blockchain and cryptocurrency companies, that now they can go and build the actual products they want to build in a way they couldn't before because of these things. I don't know, truthfully, that any of the regulatory momentum we've seen engenders any more trust in the overall industry than it was before. I think that just internally, a lot of these kind of, relatively invisible problems from the actual consumer standpoint that a lot of these businesses were facing, it has now been removed. And the hope there is that we get true innovation and you start to see actual practical use cases of things on the blockchain, of which we've talked about several. And so I personally am optimistic that a lot of these companies that, again, would have been otherwise unbanked now can go through the standard process. They can get banked and they can actually start building blockchain technologies that, engender better security, improve on the idea of traceability for content, for, not fungible tokens, those kind of things. I'm really eager to see those kind of things, but again, that's kind of the way that I see it, playing out in the most, I think well-known of cases.
Do you want to recap? Mark Andreessen talked about on the Joe Rogan podcast that crypto startups were being strangled. So I think Operation Choke Point 2.0 or something like that, where the Biden administration was particularly draconian in cracking down on crypto startups, tangling them up in lots of legislation. Presumably that would be better now under Trump and David Sachs.
I think that's a fairly true statement. So in truth, I haven't watched the entirety of the Mark Andreessen interview on the Joe Rogan podcast. I've only seen snippets, but I do think that what you just said is a large summation of my understanding. The counterpoint that I want to pose, I don't really know how this is going to play out, but playing devil's advocate to that position, I think there is a position that exists in which Bitcoin is the largest threat to the US dollar currently. And if you are somebody that believes it is very important to the US economy for the dollar to be the global currency, in some ways that could be viewed as an anti-Bitcoin stance. So I think there is some spin of the argument that says, while we being the United States, are focused on disallowing other countries' currencies to become kind of the standard for global trade, it is equally risky for us as a global economy to allow Bitcoin to become that kind of token currency of global trade. And so in general, my views are somewhat libertarian in that I would like to see the government not kind of, strangle or limit innovation in the startup ecosystem. So my general reaction is to be more inclined to the ways in which the regulatory environment are shaping up rather than what it kind of has been. And so I think in that way, I would agree with Mark Andreessen and David Sachs and others to say that, less regulation in the crypto space is probably better for startup innovation. That said, I do think there's an economic argument that I've heard others make that say the global adoption of Bitcoin as the kind of reserve currency is detrimental to the US dollar. And I think there are several implications of that as well. And the other thing that I would just add on in kind of addition to this is as with anything, people have their kind of personal biases in these kind of things. And so when it comes to Mark Andreessen specifically, they have an entire crypto fund. And so there, I think that all of those things, while true or not, should be taken with the appropriate context of it's good for them if crypto can run, and it's good for their bottom line if crypto does really, really well. And so I think that is obviously driving some of those perspectives also.
All right, to change gears, I wonder now with David Sachs and in the role he's in, the impact on OpenAI could be significant. Elon, I believe, my understanding is in early December after the election, he filed an injunction related to OpenAI. Elon was a co-founder and early investor in OpenAI with the idea that it would be a nonprofit corporation, and it's since gone through lots of complexity and tangled webs to become a semi-for-profit company with a nonprofit arm. And so with David Sachs as a close friend of Elon, and now kind of in a position of authority, responsibility as AI and cryptos are, how do you see his impact on the value of OpenAI? And do you agree that OpenAI will go to zero, as I've been arguing for some time? Or do you agree that OpenAI will be significantly harmed, diminished as a result?
Yeah, I'll start, and I'd be very curious to hear Lakshay's thoughts on this. I think, in short, I don't think OpenAI is going to zero. I don't. I think there's too much intellectual IP there. I think that they obviously have assets in the form of GPU and compute. Will the valuation get slashed dramatically? I don't know yet. It still feels to me like there is so much cachet, so to speak, in the OpenAI brand, in their global dominance, in, as Lakshay has described several times, kind of the developer ecosystem, that so many things are built on top of OpenAI APIs that it feels to me like they have excess staying power, independent of the conversation around for-profit, nonprofit entities. Switching gears to the for-profit, nonprofit entity, that corporate structure has never made sense, right? It's always kind of been this nebulous transition of, we originally invested in this research thing because we weren't sure what the practical use case nor the product for AI was going to be. All of a sudden, it had a practical use case. And then I think the OpenAI board, Sam Altman included, got caught in this limbo of how do we continue to do groundbreaking research while now also trying to return shareholder value. And I think this is the reason why, traditionally companies are for profit from the beginning, because then you don't have to worry about this kind of disentanglement of these two entities. I hesitate to speak fully on whether or not I think this was navigated with the appropriate level of thoughtfulness, or if this is just a consequence of it being very convoluted and difficult to untangle. I'm kind of the kind of intuitive belief that there was some purposeful kind of weeding out of early investors in order to retain larger equity for current and future stakeholders. I think that they've tried to kind of have their cake and eat it too, with this idea of being a for-profit and a nonprofit, and all of the kind of, again, tax and equity advantages that come with that. But I do think that in general, it started out as a research project. I think that things transition, things evolve, and maybe it is possible, at least I think speaking from the most forgiving of stances, that the people who are running this thing just got caught up in a situation in which they couldn't it thoughtfully navigate. Again, I tend to not believe that, but I would like for that to be true, I think. And so I do think that you raise an interesting point, that we've kind of seen two sides of this. There's kind of the pro Elon side, and there's the pro kind of Sam Altman or the pro YC side. I think there's also a longer discussion to be had around kind of these fractions that we're seeing evolve in Silicon Valley. And I think that, speaking as an outsider, I don't really know, but I am kind of interested to see it play out. Well, actually, I'd be curious. What do you think? What does OpenAI have staying power? Do you see this, nonprofit profit entity being in conflict? What do you think?
My general read is I think OpenAI has reached a critical mass of too big to fail. That's not to say that they can't reach zero. Obviously, they burn way more cash than they can possibly make. But I'm kind of the opinion that the tech industry at large will continue to prop them up, because right now it's the single biggest data ingestion pipeline on anyone in the world, effectively, right? And that fundamentally, maybe not forever, but at least for the next 10, 11 years, everybody wants the data coming out of LLMs because it's the most personalized sort of information you can have about someone, right? Google and Microsoft, Facebook, anyone that runs ads, they are collecting data that is telling them general sentiments, oh, they looked up this thing, and they get a general trail of the sort of person you are, right? But OpenAI, they're learning how you speak, they're learning what your general topic of engagement is, and at a fundamental level, if you're clever enough, you can also kind of engage with how someone thinks at a really, really fundamental level, with LLM systems being the interface, right? And so, regardless of what happens with governments and the regulatory cases, I mean, again, Microsoft's all around this thing. Nvidia's backed it, Apple's been considering back it. There's so many people that I think even if it takes critical damage, it will persist in some fashion as the product that consumers know, What that means for like the organization and like its structure overall, I think is a different question, but it will survive. Like it's reached such a point where like it's changed the way that like the average teenager engages with information in perpetuity. It's changing how we're engaging with information. It's the most popular interface for it. And all of that data is going to continue to be valuable, assuming OpenAI like plays the same cards. And if anything, the data that they get to collect is their immunity from death in some capacity, is how I look at it.
So, Sean, I'll throw a question back to you on the back of that. And that is, in some ways, on these companies' balance sheets, you have the assets of the GPUs. And if all of a sudden, we do see diminishing returns for model training, those GPUs can be used for other things, mining cryptocurrency, as an example. So I'm curious if you kind of put any personal weight in the balance sheets, that is the data centers that these companies have built out, beyond just kind of what they're able to offer for either the consumer or the enterprise in the software space.
Sure. I mean, I think like, well, at least for in some of these cases, like so when you're running ChatGPT, most of that inference is running off of like Microsoft servers. It's not running off of OpenAI servers. And obviously that training can be used for a lot. I do think we've seen this sort of like plateauing effect about like, there have been articles that come out about like Google, OpenAI, like they've reached like a pretty steady level of improvement. Like there's not a big drastic bump. And even like the O1 models that we've seen, like, yes, they feel a lot more different. Regards to like actual performance for most use cases, it's like relatively similar. And so I think it depends on, obviously that's asset. I think like GPUs will continue to be valuable, and like we continue to see an issue with supply and demand. Obviously there are world of events that can occur, like ways that production and supply chains can change where like those continue to be assets for other things. I think ultimately most of these companies that are servicing models and provider options, whatever, they fundamentally become infrastructure companies. I think it's very realistic to assume that like in like 10 or 20 years, what OpenAI and Anthropic are the hosts, like they're AWS equivalents that are specialized for GPU-based compute. And it just so happens that they already have infrastructure for like, use OpenAI servers for running inference on my custom trained model. Moderna goes to them, says like, build me a model and you guys host it. Whosoever does the same thing. It just, that feels like the eventual scale that towards which we'll go. Whether that becomes something that like becomes an asset that other people can use, like they start selling off time, maybe a little bit further away, but at least right now, like again, they get to control the data ingestion point, and that comes with kind of like a double value where people are paying for their GPU time while also giving them more information off which to learn stuff.
But given, I would say if that were the case, then you're losing essentially all of the IP value of what OpenAI has developed. Like my forecast is that OpenAI will be a vassal state, a subsidiary of Microsoft within 10 years. And it's just a question of how fast do we get there? They're burning a huge amount of cash. There's almost no way they're going to make enough money to sustain this thing without further subsidy from Microsoft or raising on the public market. If you were Mira Murati, you would want to be selling your secondaries as fast as possible, right? Like this is the time. If you've got a significant insider equity position in OpenAI, this is the time to sell all your stuff and get out. Right? Take whatever price the market will give you before this thing goes down, because OpenAI's tools, like if you recall, there was a board meeting, and Microsoft's a public company, so their board notes are public. There was a board meeting right after the $10 billion OpenAI investment where the CEO was asked about this investment and why he thought it was a reasonable investment. And he said basically to his board, don't worry, we've got their data, we've got their models, we're above them, we're below them, we provide all their infrastructure, we have everything. And that's essentially, I think, the most important note about OpenAI, as I see it, is that ultimately that was an acquisition price in his mind. It wasn't a investment; it was the acquisition of all of these assets, so that eventually, when this thing collapses under its own hype, it will just become another thing Microsoft owns, like LinkedIn and like everything else that Microsoft owns.
I generally agree. For the record, when I say like invincibility against death, to me that means like the product and the org chart that exists will continue to, but will be like realistically underneath a different org, aka Microsoft. I think like, especially with, it feels very realistic that like I don't foresee there being like such a significant model improvement that allows this thing to run like at a positive margin. Like, I don't know what that could possibly be. And we've seen like OpenAI just announced like they're doing like a $200 per month model, which is a bunch bigger. We'll see how that does. I have no idea. But it feels a lot more realistic that the structure of how like an LLM tool reaches mass adoption or like continues to persist at very mass scale ends up being one big company generally has a lot of profit anyway, and they just assume a big chunk is taken off the top because of AI costs. That seems a lot more realistic. And Microsoft's in a sort of position to do that in 10 years' time.
Awesome. I also think that we'll see significant kind of changes in the ecosystem over the next year or so. I think that we've kind of all talked about that, and it'll be interesting to see, and we'll continue to keep tabs on it on some subsequent episodes of the ScholarAI Founders Pod. That's a great place to call it for this week. So thank you all, as always, for joining us. Reminder to catch us next week on all of your usual podcast locations and find us on our YouTube channel. Thank you all, and see you next time.